Hi guys, welcome back to the pullback effect. In today's video, we're going to be talking about the Fibonacci tool and trading. You will learn what the Fibonacci tool is, how to use it, and what we normally use it for. So for those that don't know what Fibonacci is, it's pretty much a sequence that we see throughout our life, right? You could find it in nature, you can find it in biology, in anatomy and astrology, etc. It's pretty much everywhere in the world. It's a certain sequence that we can find in different examples. And it is also something that we can find or use it in trading. So there's a tool in trading that's called the Fibonacci or fib retracements. This fib tool helps us understand or find a certain sequence in retracements in price. Okay, so I'm going to give you a really good, simple example about the fib tool. And we primarily use it to measure ranges in price. Okay, so let's say price created a low here and went up high to create a high here. Okay, so we measure a range in price from low up to high. Okay, and we place our fib tool from the low up to high to expect a retracement to follow and a continuation to continue right afterwards. Okay, these fib levels or sequences help us determine to pick a good area for us to either buy or sell. In this example, we would use it for a buying example. Now, the reason we I say that we measure ranges is because this is exactly what we use the tool for. So I'm going to use a really simple and clear example for you guys to understand a little bit better as to what I mean. Okay, so let's imagine that you guys are either buying or selling a car. In this example, we're going to use it as if we were buying a car. Okay, so we have a range, a price range as where the car can be sold for, right? Let's say the cheapest you could sell it is $1,000. And the best you could sell it would be, let's say it is $2,000. Okay, so there's a certain range of price where you could sell or buy this certain car that you're looking at, right? So the middle of that range would be the 50%, which would be $1,500. 1,500 USD. Okay, so all this tool is helping us is determine or measure a certain range in price. So let's say we only know what the 50% is, what's the highest price, and what's the lowest price from a certain vehicle, or in this case, in trading, a certain asset as Forex, indices, etc. So let's say this car that you're looking at, the highest price of a range of price that it sells for is 2,000 and the lowest is 1,000. And the mid range would be 1,500. So if you want to be a seller of this car, you would prefer to sell the car from anything above 50%. Okay. And hopefully closer to 2,000%. So if a market ranges from high, let's say we made a high here, and created a low down here, that would be our range of price. Okay, so we would if price is currently in $1,000 range and you want to be a seller, you obviously won't want to sell it at $1,000 range. Why? Because it's going to be too cheap, and you know that you can actually get a better price at either 1,500 or 2,000 in that area. So in this case, you would actually want to be a seller inside of this price range. Okay, that's where you would want to sell this car. So once price retraces inside of the previous range, once it has a really good retracement, you could probably begin selling the car. And if you get a good price and if price starts going down, you would be profiting from all of this price in here. Okay, in other words, or in a different situation, let's say you see that price actually makes a low down here and a high up here. Okay, low to high, we have a range in price. If you want to be a buyer, you would want to see price retrace inside of this range below 50% and get a good price lower than 50%. That would be the best price for you to actually buy this, in this example, this car. Okay, if you're at a 50%, that would be fair market price or equilibrium. So it's really, if you see a price market that is ranging inside 50%, it's probably not a good idea to either buy or sell. You would want to wait for a really good expansion inside of a retracement or a continuation lower to sell, or the opposite way, you would want to look for a really good expansion lower into a retracement of a range to profit and buy. So all the fib does is helps us understand a range visibly and see where we're able to make decisions to make buys and where to make decisions to make sells. Okay, now if we add the fib ratios, which we'll add right now. Just give me 1 second. There we go. Okay, if we added the fib ratios, there are certain sequences or certain ratios that we would rather see it go to. The most common one is the 62, 71, and 78.6% ratio. So if price comes down to these levels here, that's where you would likely find the best buy in your area. If it retraces even lower, you could expect the 88.6% to give you a really deep discount for you to buy this asset class. So this would be like the last line of the sand that you would want to see it retrace, because if it does break this level and continue on lower, it could possibly just come down for the low or even lower and not actually be a retracement, but a continuation. That's why we should understand market structure, which I showed you guys on one of our previous videos. So let's combine the fib tool with some of the information that I gave you guys on the previous videos, right? So if you guys understand market structure, and in an uptrend, you understand that we make higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, etc. So we could clearly see that we're in an actual uptrend, as we see in this example. Okay, we see that we're in an uptrend. So and we're able to mark out this low, okay, and this high, that would be a range of price action, okay? We have our range from low up to high. So what do we wait for if we want to be a buyer? We would wait for a retracement. A retracement to where? Under 50%. So you see here, we actually have our ratios here. We have the 62, the 71, and the 78. And you can see how price retraces inside of this area, hitting exactly the 78%, 78.60%, and then it starts heading up higher. So you can clearly see that we had a really nice buying opportunity right here to keep on going higher. Okay, and we use also other information in the chart that we will start looking at in the future. But for now, this is something that could help you into deciding whether you should be a buyer or seller by finding a good discount or a good premium inside of your range. Let's take another example here with this downtrend that we have here. If you see that price has been going in a downtrend, you obviously want to pick a range in price to be a seller. So we have a nice high right here being made. So let's go ahead and select that high down to a low. Okay, in the beginning, we made this range here from high down to low. You can see that we don't get to 50%. So we wouldn't have a sell right there. If we continue down to a low here, we wouldn't have a sell there either because we never retrace anywhere higher than 50%. And then we have a sell here, which could be a 50% area, which is a fair market price. But if you look closely, you could see that we actually made a really nice high here or another new range here. So if we bring down our fib, or let's take another fib, mark it from that high down to this low. Okay, you could see that we have a parent price swing from high to low, where price retraces into a 50% area, and we have a new price swing. Let's go ahead and erase the parent one. A new price swing from high down to low, which retraces above a 50% area and into a 62 and 78.60% area. So this could be a really good selling opportunity. Why? Because we were in a 50% range from the biggest range from high down to low, and we're in a deeper premium range from this high down to this low above 50%. You guys could see here that we could select this one or this area for a sell, and price could start going lower. Where your stop would be above the 100. So let's go ahead and say we got an entry at the 71% and our stop was at the 100%. Okay, if we bought it at a premium, where can we sell this or if we sold it at a premium, where could we buy this back to, or where could our TP be? Well, obviously it could be at the low, which would give us a 2.5%. And remember what I taught you guys in the quarters theory. Right here we have 1.375 level right at the close, right? And we grab a horizontal line and place it in here. We can see that we're fairly close to the 1.0375. So what would be the next quarter? it would be the 1.0350 level. So let's go ahead and look for that. It would be 1.0350. Okay, so that could be another area where you can look for a good range of take profit. Actually, 1.350 gives us the exact low here. So we actually hit that level from this low. So if we break down below this low, we would have to actually find the 0.325 level, which would be this one right here. That could be an area for you to take profit. And that gives you almost a 3-to-1, a really nice 2.69%. And that, my friends, can be a really easy setup for you to determine. Obviously, we have continuations lower. So how can we determine if price could start going even lower than just the last quarter's level? Well, we have other Fibonacci sequences as well, which are called Fibonacci extensions. These extensions are how much percentage of this range does it extend to further out. We have the 27.20 level, which would be here. That could be as far as where price could stretch out. We also have the 41.40 down here and the 61.80 down here. And the most that you could probably see it expand to would be a 100% or another range of this high down to this low. If you grab this same range and put it down below, it would give you the 100% down here. Okay, so in other words, if I grab a square box and measure this range and place it down below it, we could see that 100% would give us down here. And that could also expand your risk to reward ratio, which now you would have a 6-to-1 risk to reward on this trade. And you could see how price, in fact, does go lower onto that level there. Right about here. So that's a way how you could determine or use this fib tool to help you determine whether to be a buyer or seller and where to place your stop losses and also where to place your take profits. Now let's look at one more example. And let's erase everything that we have here. Okay, so now let's measure the next range right here from high down to low. You can see that you have a range from high down to low. So if it starts retracing, where can it retrace to? And where can you start looking to be a seller would be from the 78.60 to the 62%. And you can see how price hits the 62% and starts heading down. So if we grab our fib level here, place it on the 62, stop would be at 100% or above. Okay, where's your TP? It could be at the 0% or the next quarter level, of course, if you are able to mark quarter levels. Then it would also be the 27.20%, the 41.40%, and the 61.80%. And you can see how price goes exactly to the 61.80% right there and starts heading up higher. Okay, so once you see that price starts heading up higher, I'll just do one last example here for a buy scenario. You guys can see that we have a range from low up to high. And if you look closely, you can see how price ends up at a good 62 to 78.60% and keeps on heading up higher. We made a new high from this low, made a new high here. If you missed this entry here, you could get in a buy entry from this retracement from this low up to this high, comes down into a 62% once again. And we begin to continue on higher. Using our fib levels, we can see how we have a reaction on the 61.80 and on the 100% as well. And then finally goes up to the 161.80% here, making a really nice high before a deeper retracement. Okay, also, you could also grab this range in here as well, from low up to high. And we could see how it goes into our golden ratio, 88.60%, a really deep retracement to continue on going higher, making the high at the 41.40% right there. So that's how you can use the Fibonacci tool, or how you should be able to use it into your trading strategy and to be able to identify buys or sells. I hope this video was insightful for you. If you have any questions or anything, go ahead and ask me in the comment section or in my Instagram, and I will happily respond to your doubts or concerns. Thank you guys for watching this video. If you haven't subscribed, make sure to subscribe and like this video. I will be posting videos each week as I've been doing. Hope you guys have a nice day. See you on the next one.